Jordan Spitters, Eximus Realty. Thanks for joining me, man.
Hey, Patrick. Thanks for having me.
Hey, listen, we got a lot of things to talk. We're talking real estate and what's happening in Lower Mainland, Fraser Valley, right out to Chilliwack. And so give us a little bit of an update. We were talking just pre this, is that deals are happening, but their inventory is still low, listings are still low, but you're getting some deals done. So give us a little bit of an update of what you're seeing overall, and then let's get into some of the more, significant details. So what are you seeing overall if you go Lower Mainland, Fraser Valley, even Vancouver?
Yeah.
Give us some specifics what you're seeing.
The sky is not in fact falling, and the market is moving. We are right back to multiples. We are right back to homes moving very quickly. Just had a listing that went live yesterday. We had a showing, a request to go in within an hour of going live, and I have an offer in my inbox already this morning. I tried to get into a detached home last night. They had a subject-free offer within 6 hours of being on the market. It's moving quickly. I've been saying for a while now, it's a tale of two marketplaces. You've got the folks that are still trying to get their lottery ticket number, their March 2022 pricing. They're drawing those average days on markets way up, and they're affecting the stats. And then there's the market of folks that are realistic, reasonable, and price their home effectively for the marketplace, and they're gone.
Yeah. So let's consider something, first and foremost, let's break this down, because all we're seeing is prices are down 30%, 25%, prices are down 40%. I mean, we're getting all of these big headlines. So you and I know, and we share this all the time. Yeah, it's down 20% from all-time highs.
Yes.
We came off a 22 market, which is like historical, record-breaking, crazy prices. Got it. People got caught in FOMO, all the stuff that we've talked about many times. Now, so get us grounded in, let's say, 2018, 2019. Our prices down 15, 20, 30% from 2018, 2019, even 2020. Give me some scope of just how this market really is, being boots on the ground like you are, Jordan.
Yeah. So, excuse me. We had record-breaking highs, 40% increases year over year. We did see between a 20 and 30% drop in average value across all marketplaces here in the Fraser Valley. Some cities that did better than others, Chilliwack, they have the economic fundamentals. So their detached only went down about 23%, whereas Langley, that doesn't quite have the, investing credentials, their average went down by about 30%. But that's across all properties, A, Bs, and Cs. And the Cs that are unsaleable are going to be dragging that value down. What's interesting, though, is from that all-time high, the market didn't crash so much as just pull back. We saw precipitous drops for the first 4 months after March, when rates started kicking up like crazy. And we've had flat prices ever since. The last 8 months, prices have just been barcoding up and down, average difference maybe 3 to 5% month over month. But otherwise, prices have been pretty flat across all categories.
So when you consider what's going on with, some of the, policies that our government puts in, municipal or even federal, when you consider foreign buyers, what they did with the foreign buyer ban, and, first they had foreign buyer tax, and they now have foreign buyer ban. How's that been working?
Well, we haven't seen it have any sort of effect on our marketplace here. As I mentioned, we're back into multiples, back into home selling extremely quickly. So they've made it difficult for immigrants, newcomers to Canada to purchase real estate. It isn't slowing the marketplace down because they haven't addressed the underlying core issue, and that's the lack of supply.
Well, it's interesting too. It's hard not to be a little sarcastic when it comes to government. They do that, there's a squeaky wheel called people in general saying it's all because of foreign buyers that we have this housing problem. And if we just cut those foreign buyers out, and what happens is politicians in their classic way, in terms of, I almost call it vote buying, and I don't want to get too political, but it really does get me fired up, is it's politics over policy. It made no sense then. It makes no sense now. And I think as we go forward, we're going to really see that is just another thing that the politicians did to try and quiet the squeaky wheel, because the general public and most people would have no reason to understand what's going on in the market. So enough about that. No change there, no surprise. Now, how about let's talk about the other policy, this 72-hour mandatory decision period. Has that been effective?
Well, it definitely has slowed down the flow of information. It hasn't made any effect on the movement of the marketplace, though.
Yeah.
So the 72-hour rescission period is a mandatory time that's imposed on all buyers and sellers whenever you transact a property now. Even if your property has been sold subject free, you cannot firm that sale up until 72 hours has passed. And that's business days, by the way. So if you write that offer on a long weekend, it could take 6 days or more before you
Wow.
can firm that deal up. And these are, this can be perfectly rational, reasonable adults that are no longer allowed to make their own informed decisions. It doesn't stop subject-free offers. I mentioned I tried to get into one in Walnut Grove. It was up for a very short period of time. It got a subject-free offer, but now I have to wait 4 days to find out what that sale price was.
Yeah, it is really interesting to see. I guess over the long term, we'll see how that all plays out. Again, I'm a little bit skeptical, trying not to be cynical, but I'm definitely skeptical about whether this will really work or not. When you talk about what's happening, you mentioned Langley, you mentioned Chilliwack. We look at what's happening in Abbotsford. Certainly over the past several months, you and I have talked, and we were even chatting offline before we got on here about, is there any possibility of buying investment real estate in the Lower Mainland, in the Fraser Valley, something that might even come close to cash flowing? Is there those deals out there? That's part one of the question. I'm going to do it in two parts. And then the next part is through all the stress of increasing interest rates and what's going on in the world in general, are you seeing any distressed sellers? In other words, motivated vendors. So part one, is there any chance for investment properties? I know that they're probably kind of like hen's teeth, I guess, rare, but are they there? You answer that question, your boots on the ground. And then secondly, are you seeing any kind of, stressed vendors?
Absolutely. Both. Yes to both. So at the R4 meeting that we had last month,
Yep.
I featured a fourplex in Chilliwack, and it was rented on both sides, massively under rented. It was a great burr. It had 1980s built with original condition. Both of those tenants on either side, excuse me, both those tenants on either side were ready to vacate, meaning that you could have taken this fourplex, renovated it, re-rented it, increased the rent significantly. And once you got market rent on both those spaces, it was cash flowing upwards of $1,000 a month, even with a rate of about 5.5, I think it calculated that. So there's absolutely deals out there. That being said, that property sold in about 2 days. So, if you're looking for a deal, I can guarantee you there's 100 other people looking for that same one. So you got to be quick on the ball. And this notion that we can take weeks or months to go and look at properties because they're just going to sit around and wait for you is misplaced.
It's interesting too. So let's go part two, and then I want to move on to another segment of this. But let's do part two. Are you seeing some motivated vendors in the marketplace, Jordan?
Yeah. So, I did one last month where I had an assignor come to me, and she was no longer able to complete on her property. So we worked out a joint venture agreement where I came in and helped her close. We're in a balanced trending to sellers marketplace now. But what that means is more often than not, sellers are fighting with one another to sell their property. And when you have maybe, 10 on the market and buyers have a good amount of options, and you only have pictures on a page versus someone being able to go walk through that property, you're at a clear disadvantage. And when you couple that with the fact that assignments have fees on top, the assignment fee, and then a limited timeline because you have to get that done before the completion of the project, it makes assignments difficult. So if you can partner with somebody to actually close on that property, eat those additional costs, and then market a physical property that you can walk through, touch, smell, feel, you're going to have an advantage in the marketplace. And then you can work out the deal and the GST and all of the taxes get back on the backside. But I did one last month where I was able to help a distressed assignment close on the property, recover her deposit. I made a little bit of money. So win-win situation. Just yesterday, we had another buyer that reached out to us, bought with a different agent, wasn't informed on the marketplace, wasn't informed on rate holds, any of that. And now he's unable to complete on it, and he's scrambling to figure out what his options are. So there's definitely opportunities. And as you mentioned, rates keep going up. They keep getting more difficult. Lending qualifications keep getting tighter. It's not going to be getting any easier for these assignments to close. We're going to see more options or opportunities for this.
This is so important. We, at R4, we brought, a good friend of ours, Barry McGuire, real estate lawyer for 48 years, teaches, really advanced creative buying strategies in times like this. It's the reason we brought him back. Everything from assignments and agreements for sale or wholesaling back to the assignment side of things, rent own. These are all very, very workable opportunities in this market. And it's interesting that it just boils down to education. And I don't want to step over something that I'm sure you're seeing, Jordan, and so I know I'm singing to the choir, is that, you know, when you've got motivated vendors, when you've got a market like this, investors or even your retail clients, because I know you guys do a ton of retail, you know, just people buying homes and selling homes because life happens and we got to buy, we got to sell, we got to do all those things. But whether you're a retail buyer or an investor, is taking the time it takes to prepare in advance for your financing. You know, there's an old phrase that a friend of mine once used many years ago, he shared with me, which is, you can't steal in slow motion, which is only meant to say this: deals show up, motivated vendors show up, opportunities show up in a tight market, and you have to be prepared. You have to know where you are financially. You have to have all your mortgage broker, your financing pretty much in place. So in other words, you have to know what you can do, what you can't do. And that means working with an investor-focused mortgage broker, an investor-focused realtor like yourself, so you can get these deals. Now, like I say, I know I'm singing to the choir, but I mean, you have to have experienced people who are just not showing up prepared. What are you telling people? Get ready. How are you handling these situations? Because I think for you, it must be frustrating sometimes.
It can be. I mean, we feel for these people because they back themselves into a corner unintentionally. They don't understand, you know, how they get put in these situations, but they work with agents that maybe don't have the level of experience that we do, or they're not as good at communicating, and they're not educating their clients on what their options are. I'm a big fan of educating my clients so they have the same level of education and market knowledge in that instance as I do. I don't want them to have to constantly be coming to me asking questions. I want them to have that information up front, ready to go. You know, the gentleman that reached out to us yesterday, there were options available to him to have rate holds for 3 years. We wouldn't have to be qualified. He could have gotten a rate last year for, you know, 1.25, which is what he had originally qualified at, but he didn't lock that in. Now he's getting quotes at, you know, 5.5, 5.95, and he can't qualify any longer. A couple of phone calls, you know, a couple of phone calls would have solved this problem for him. And 1 year later, now he's scrambling to close it. And you made a point about investors having their financial ducks in a row. When these distressed assignments come along, unfortunately, they're not generally reaching out when they have 6 months lead time, right? They need to close very quickly. And the reason that they're scrambling is because that timeline is shortening. So if they come to you as a potential investment joint venture partner, and you say, well, sorry, I've got to get my finances in order, I'll get back to you on that, and that opportunity might pass you by.
Yeah, you know, folks, if you're listening to this, I can't stress enough. You know, Eximus are trusted partners of the Real Estate Investment Network for a reason. And aside from doing what they do as realtors, they're also guides. You know, they're kind of coaches in regards to supporting you and getting your deals done and moving forward quickly. And I think, Jordan, you hit it on the head. You know, motivated vendors are motivated because they're bumping up against tight timelines, money issues, or time issues, whatever it might be. And you have to be prepared in advance. Okay, so one final topic I want to talk to. Your boots on the ground, you're in the trenches, like I say, retail or investor focused. Mm-hmm. How are the banks? How are you finding it? What is your feedback in terms of what the banks are doing for financing? Are they being fairly, I guess, accommodating given the recent changes in rates? Is policies loosening, tightening? I mean, they have to be getting deals done, and historically, banks kind of work around certain things to get deals done. What are you hearing on the street? I know you're not a mortgage broker, but what are you seeing from your buyers or your sellers?
Yeah, I mean, it feels like it tightens every single year, right? It's not getting any easier. The rates increasing obviously kicked out a lot of potential buyers from the marketplace. But oftentimes what will happen when the rates go up and folks lose the buying power after their rate holds are expired, they don't leave the marketplace. Sometimes they'll, you know, pout for a little while, and then they'll kind of reevaluate, reposition themselves, and go, okay, well, maybe I'm not going to get into that detached 5-bedroom. Maybe I'm looking at a 4-bedroom townhouse or something like that, and then they'll just kind of shift their focus. The market, you know, moves along, and then the sellers kind of adjust to the buying, the amount of buyers in the marketplace, and generally prices will drop. We had the rate hold that came through about 2 weeks ago. It hasn't really affected the marketplace too much because a lot of folks at this point are locked in on their rates, which are significantly lower than the variable. I was talking with one of my mortgage broker contacts, and apparently there are more restrictions coming in on lending qualifications. I'm still waiting to hear an update on that, but it does sound as if the door is going to get a little bit more closed. So, you know, folks waiting, thinking that it's just going to be easier in the future, I think you might be a little bit disappointed. I would be acting on it today myself.
So that's so interesting. Okay, and before we wrap up, I have one other question for you, which kind of is on topic, off topic, but we're seeing in the world of investment, this uncertain environment we work with, global macro issues going on, whatever those might be, from the UK and Europe to Russia, Ukraine, Taiwan, China, it's just like, my gosh, there's so much going on. But when it looks to, when people are looking at investing capital, one of the issues that comes up all the time, aside from things like Bitcoin or precious metals, is land, and really specifically looking at agriculture. So when you look at rural, and then next level rural properties, even the smaller 5 and 10 acre parcels, right up to whatever bigger, literally agriculture, are you seeing that come on the market? Are you seeing actually an uptick in demand, or is that really what's happening? Are you seeing that trend out here in the Fraser Valley, given that we are an agricultural epicenter for much of what goes on in Western Canada, well, actually all of Canada? But any updates in that regard? Are you seeing capital flow into those areas, Jordan?
A little less lately. We saw a lot of it last year. What happened essentially is buyers that would have bought into multi-million-dollar homes in city centers or suburban centers realized, hey, I can get into an ALR piece of property for quite a bit less. That's not that far out of town, especially Abbotsford, for instance. It has some of the most agricultural lands in the entire country, and that surrounds the whole downtown urban core of Abbotsford. So even if you got an ALR parcel, say a 5 acre plot, you're still in downtown in maybe 10 minutes or so. So it's not like Alberta where you're 40 minutes away from an urban core. So we saw buyers realizing, hey, I could get essentially an estate property for pretty much what I was going to pay for this, mini mansion downtown. And then I have a lot more space. I can potentially farm on it, get the tax credits that way. So we saw a lot of them pick up and sell through when the market was moving very quickly, and it accelerated the price point on agricultural land significantly. It slowed down a little bit now. Once the price points fell in the urban centers, we did see people kind of moving back that way. But I think folks have opened their eyes to the fact that agricultural land is a viable option. As a farmer myself, I'm a little bit reticent. I feel that agriculture should be kept for farming and not for estate properties. But there's an argument to be made on both sides, I guess.
I hear you. Jordan Spitters, really appreciate the update. Lots of really great insights in here that you've shared today. So thanks again for your time. Again, Eximus Real Estate or Realty folks, trusted partners of the Real Estate Investment Network. Jordan Spitters, one of the leaders on that particular team. Make sure you reach out if you're looking for some deals. Jordan, thanks for your time, buddy.
Thanks so much, Patrick.